Today, we're going to be doing some technical analysis for the SPY, Qs, Apple, Tesla, Amazon, and even NVIDIA, so stick around for that. But today, we wanted to talk about why you should not be shorting today. If you were here yesterday, if you were subscribed, you actually got this info and we talked about it on NVIDIA because it was a great example, okay? This has happened to me a few times in my trading career, and it's bit me in the butt more times than it's really helped me out. So overall, what we're explaining here is why we don't want to short today is just this right here. You have the MACD that has crossed on a daily chart, giving us that green impression on the histogram. And you also have an RSI that's just about to get above 50, which means that this move does have some strength to it. And as we go into shorter time frames, we can see a trade that might be tricking people into tomorrow. Right now on the 15-minute on the SPY, we do see some kind of divergence forming here. Okay, we're seeing price start to coil up. And overall, what that just means is there is an explosive move coming in the near future. Now, that explosive move can play to the downside, like this divergence here on the MACD is suggesting. It doesn't really fully prove itself on the RSI. I mean, it is there, but it's just not that significant. But that doesn't mean the move has to go down. Price is coiling up. The futures market could take care of these overbought conditions, and we could actually see some kind of gap up in the morning. And what I am paying attention to this week is the weekly expected move for the SPY, which is 437.24. And maybe, just maybe outside of this zone, we start to see price come back into it because it likes to do that a lot of the time. Possibly a bigger hint we could get before that CPI, before that FOMC minutes, is if price just skyrockets up to these levels before that happens. You can notice at that point we would be outside of our monthly expected move for the whole month of October, and we want to get back into these yellow lines. And then you can also see that we would be outside of our weekly expected move based on the options for the week, and we would want to get back even in between those two purple lines there. So we want to be very cautious if we start to get outside of this. Overall, it doesn't mean that we can't see some kind of big bull run. It just means that the probability or the risk is going to be to the downside at this point, and you might have missed out on that upward move. And we can actually see an example of that right here with the buy signal on the Qs. Okay, the Qs got a major buy signal yesterday that we talked about. They got that first green impression on the histogram down here on the MACD, and it even got above 50 on the RSI. So we are seeing some strength in this move. And a lot of the time, that's why I didn't talk about Israel, is because usually a lot of this type of geopolitical news, it still stays relatively the same. If we would have broken below this low, then we would know the direction is going to be to the downside. And if we just kind of fizzle out and do nothing, which is like today, then you're going to see that trend start to continue. Okay, so right now we are seeing that if you did possibly buy shorts thinking, oh, this is a war and it's going to crash all the way down, guess what? We did gap down because people did think like you did, but at the same time, that wasn't enough news to push us to the downside. Our direction is still going up. And then that is an example of why you do not want to short when that first crossing here actually happens on the MACD on a daily chart. I wanted to use that as an opportunity to just say that I will talk about geopolitical news if I think it is going to affect the market. Of course, if things start to, scale up, more countries get involved, then we could see some major volatility in the market. But right now we are not seeing that. So I didn't feel it was relevant to talk about yesterday. Now we are seeing on the Qs that price is starting to coil up. We are seeing the divergences, and it's a little bit more significant on the Qs. So maybe this is hinting that we are going to see some kind of pullback. But overall, we still want to be paying attention to this low, to the ultimate bear side. But the same thing stands true for the Qs as well. Okay, the Qs could easily see these overbought conditions, taken care of in the post market, the aftermarket, and then we could see some kind of gap up in the morning with an explosive move to the upside. So we want to be paying attention to the break of this mini trend if you are a short-term trader. Even though I'm warning about some kind of possible gap up tomorrow because this is closing at the highs of the day. I mean, Apple closed at the absolute high of the day, and a lot of the times when we do that, we do see the aftermarket like to kind of get us out of those oversold or overbought conditions, and then we could see some extension higher. But right now we are seeing a little divergence here on the MACD and the RSI on Apple, and Apple's been going up for quite some time without I would say like a constructive pullback. So we could see some kind of, cupping and then a handle, and then maybe we start to head to the upside. I do think that Apple has a good probability of dipping back down into this purple zone one more time. but it also has a slight chance of gapping up. So I just wanted to give you guys both scenarios, but right now you do have divergences, so it is possible for Apple to pull back to lower levels before heading higher. Tesla on a 30-minute here, all I'm marking out here is we're starting to see price coil up. Okay, we've called Tesla pretty well if you're subscribed. I mean, we called that head and shoulders. We kind of called this little bear trap down here, and we called this extension, and we even called that gap fill. So we did a good job, and pat yourself on the back, give yourself a thumbs up. Maybe I'll give some thumbs up next episode, but right now we're seeing that price start to coil up, and you notice that it's starting to maybe get tighter and tighter. Maybe we just stay in this all the way up until we get the FOMC minutes or the CPI. That is 100% possible. Right now, if I am a short-term trader, I am paying attention to if we break this little triangle, continuation triangle to the upside there, or if we're going to break it to the downside before this news happens. If we do coil up in between, then I am going to be, a good trader and sit on my hands. Okay, I'm going to sit on my hands. I'm not going to guess. I'm just going to make my decisions based on the data. Tesla, if you just look, we can see where this might, our expected move for this little consolidation here could go. And it looks like we could extend as high as that almost 272. And then if we put it to the downside here, we look like we could extend as low as that 243.07. You notice that if we do see some kind of breakdown of this triangle before the FOMC, before the CPI, we could see just a low down to here, and we still would not be taking out this low. So we still want to pay attention to our ultimate lows that we need to be breaking to go to further downside. But right now we're just not doing that. We're seeing price hold up, and now we're seeing consolidation in some stocks, whereas in some other stocks like Apple, we are seeing some overextension, so we might need some pullbacks. Now on Amazon, we are kind of just struggling to complete this head and shoulders. Okay, we have the left, we have the head, we have the right shoulder. We haven't necessarily seen confirmation of that move, or confirmation of that move, something like that. So we want to see some confirmation of that move. The only problem is, like Apple, we do have a high to a higher high, and then on the MACD down here, we do see a high to a lower high. Now this has not confirmed or anything like that, so we want to pay attention to if it actually confirms. The RSI one is not the most significant. Actually, neither one are that significant on Amazon, but you can see we are fluctuating a lot. So we're saying down, then up, then down, then up, then down, then up, and now maybe we get one more little down before we want to move higher. Just like everything else to the bear side, we want to be paying attention to this low. If we do break that low, we're going to probably head towards that 200-day moving average, or at least the bottom of our monthly expected move on Amazon around 117. Now, one stock that's convincing me we might need to see more downside is NVIDIA. We are seeing this high here lead to a higher high, while we do have some kind of slight divergence here on the MACD and the RSI. So we could see that start to downfall, and it actually has another divergence between this high right here and this high up here, and that's even more significant. So you just want to pay attention to those things, and overall we could see some kind of pullback in NVIDIA, or this could be our first leading move to go, test the bottom of our neckline. And what we want to pay attention to is when that neckline breaks and closes on a daily basis if you are a bear. If you are a bull, you are most likely hoping that this kind of finds some ground somewhere, and there's plenty of buyers in this area. So we actually could see this as just some kind of pullback, and then it's all dependent on the CPI and the FOMC. So the FOMC and the CPI are going to be the two pieces of data that decide whether NVIDIA is going to skyrocket higher or whether NVIDIA is going to come to the downside pretty quickly. Funny thing about the VIX today is that the VIX did close above the 200. I know it's it's a deep red bar. We actually gapped higher and we came all the way down, but we did close right above that 200. We are still above the 50, and now we're not out of our Bollinger Bands like we were up here. So we could see some kind of extension above 20 in the very near future. Overall, if you are a bull, you are hoping to see some kind of, breakdown, and especially you're hoping that that information that you get from the FOMC minutes and the CPI are good. We do have PPI, which it could move the market a little bit, but I believe maybe the PPI might be like a hip fire move, and then I believe the real move is coming with the FOMC minutes and the CPI. If you are a bull, you're just hoping for this to start to fade, start to come down. I mean, that's overall what you're looking for. And if you're a bear, you're looking for this to start to spike above 20. And we want to get that full closing bar above 20 before we start to get extremely bearish. And the big reason that we did see that pop in the market today is that 10-year yield. That 10-year yield did come off. We did call the other day that there was a little 2-hour divergence, and this looked like some kind of double top. The thing is, it's like how deep can this go? Okay, we are testing the top of the channel that we were in for quite some time. Maybe we could use that as leverage to go higher from here. Overall, it looks like that this is going to stick, and we're going to see that roll over and see this start to come down and possibly test this previous high that we broke out of that kind of started some of this turmoil we've seen over the last few weeks. One good thing is if you're a TLT trader, it looks like that is starting to play out to the upside. Now you are coming right into that 9-day moving average, so we could see some resistance at this level, but overall it looks like those yields do want to come down, and maybe we will see that, you know, future setup we've been talking about where it's kind of like a head and shoulders here. Okay, you got left, you got your head down here, and then maybe, just maybe, we do start to go create some kind of head and shoulders with the right shoulder around this area. That is a theory, but overall, I just want you guys to know on TLT and the yields, they both have strong bars, and it looks like those yields do want to come down, but the data can flip all that. The PPI, the FOMC minutes, the CPI, all of those things can take whatever move happened 2 days ago and flip it right on its head. So the overall takeaway from this video is we are seeing some divergence on smaller time frames that are kind of telling us that we could see some kind of pullback as of tomorrow, but those conditions could just be taken care of and we could see a full extension because we are seeing buy signals on almost every single daily chart on the Magnificent Seven and on the SPY and the Qs. So we could see further upside, but we want to pay attention to that data no matter where price is this week. Whatever happened 2 days ago, that can 100% change just because of one piece of data, whether it's the FOMC minutes or whether it's the CPI or whether it's the PPI. I appreciate you guys always watching, like, and subscribing. You guys are freaking awesome, okay? Almost cussed. But I really do appreciate it. It goes, you know, a long way. I do put effort into this and a lot of thought goes into these. So I appreciate it, and I hope you guys have all the luck in the world trading this week, okay? Peace.